of the real estate shares doing pretty well. There's your overall benchmarks right there. We saw, obviously, the S&P, Dow Jones pretty much flat, some weakness in the NASDAQ. Look at some of these sectors, and basically we've got what we saw, real estate shares doing pretty well, but offsetting some of the losses in phone stocks as well. We'll look at some of the movers here as well as we look at some of the companies. A little bit of movement across the board, but at the end of the day, we had some big winners in Mead Johnson, up 20%. We also had Merck up 3%. Ralph Lauren on the close side, not doing so hot there. E-Trade Financial Corp as well, we saw doing pretty weak. So you look at basically some of these financial companies, obviously not quite as good as they have been. Joe, you got some breaking news.
And some breaking news. We have Amgen reporting that its Repatha drug significantly reduced the risk of cardiovascular events in patients with atherosclerotic cardiovascular disease in the 4-year phase 3 outcome trial. But just as good news on a trial for heart medication, and the stock is up 3.2% in after hour. The Repatha met primary composite endpoint and key secondary composite endpoints. So good news on these trials.
All right, we got another piece of breaking news here. FireEye says the executive chairman resigned. Verticana has been named the new CFO. This is also coming with their earnings numbers here. Revenue was about $185 million, missed estimates of about $190 million. If you look at the adjusted loss per share, looking at earnings, lost about 3 cents, so better than their estimated loss of 16.
And we have Amazon out, just crossing the wire. I want to read you some of the headlines we're getting. Amazon Q4 net sales, $43.7 billion. Actually looks a little bit shy of estimates of $44.7 billion. Q4 EPS, $1.54. That is a solid beat if these numbers are comparable, of $1.36. Q1, you never really know with Amazon guidance. They see it $33.3 billion to $35.8 billion. That's shy of the estimates of $36 billion. You see the stock currently down 2.4%. So we'll see. I mean, this is not a huge market reaction. You have the beat on the bottom line at $1.54 versus estimates of $1.36. And joining us now to talk about Amazon, Paul Sweeney, Bloomberg intelligence analyst. What are you seeing? You're just crossing the wire right now.
Yeah, it's a little bit of a mixed bag for Amazon. As you mentioned, they beat on the EPS, but, this is a very much of a top-line revenue story because we know the expense growth is going to be there for this company. They're going to continue to invest in their business. They've signaled that continually over the last several quarters. So, again, what most investors look at for this company is the top-line story. So a little bit light in the fourth quarter, a little bit light in the first quarter guidance. So I think that's kind of what we're seeing in the stock a little bit.
Right before the close, we mentioned Amazon Web Services as being a key thing for Q4. Looks like net sales of $3.4 billion, coming in a little bit shy of estimates of $3.61 billion. Oliver, what are you looking at?
I think it's interesting, as we were talking about, right? This is basically a company, and as Paul just said, that really is all about the top line. But you still got to figure out, how far they are on their way to being, profitable, or to what degree, how profitable they will be. What do you need to look at for this company to figure out what's going on between the top line and between the bottom line?
Yeah, operating income. This is a company that, for many, many years deferred profitability for shareholders. They kept investing in the company. In 2015 and, really going through the first half of 2016, they dialed back their expense growth a little bit, surprised Wall Street with some very decent profit numbers, aided by Amazon Web Services, as you guys talked about earlier. But now they've signaled that they're going to do a little bit of a reverse course starting last quarter. They're going to dial up the spending once again, both domestically and internationally and in the cloud. And that's causing investors to kind of bring some of their expectations down.
Something I want to note here, the stock is down 3.2%. This is really a minor move for Amazon. According to the ERN function on the Bloomberg, it moves on average of 9%, which is not on either up or down typically after earnings. This is a company that's prone to really big swings after hours. So 3%, not very much. Also, just, given how big the company is, it tends to, 9% is a huge move, but so far not a huge reaction.
Yeah, and
obviously we'll see where it goes, as we get more.
Right. This is a company that does provide guidance. That's a good story. The flip side of the coin is they provide huge ranges of guidance in terms of revenue and operating income. You could drive a truck through some of these ranges. changes here. So, investors, recognize that there tends to be a lot of volatility around the numbers here because of the growth of all the businesses there. But again, this is a long-term story. The bull case on Amazon remains the same today as it was over the last 5 or 6 years, which is this is a long-term revenue story driven by the secular migration of retail sales from bricks and mortar to online. And, most bulls in this story feel pretty good about the investment that the company makes over time.
All right, I want to quickly revisit FireEye. We saw those shares moving following earnings reports. We saw that they also announced the chairman had resigned. So and obviously a company we want to keep an eye on here. Their revenue was below expectations. Their loss at the end of the day on earnings was actually a bit smaller, a 3-cent loss versus an expected 16% loss. And you can see the shares there, 17%. So you've also got the executive board here changing up, as we saw the redhead on that on the Bloomberg. So the executive chairman resigned. Very kind of named new CFO. It seems like there's some questions obviously there, and they are looking at pretty big shift there. So, but let's take a look at Amazon real quick because more people know Amazon. Paul, Amazon Web Services, you mentioned that. This has been a big element for a lot of companies that use it. It's been very disruptive in the sense. What about in terms of contributing to the bottom line? Is this something that's going to be a big part of the growth story? Yeah,
this really is. I think one of the reasons that investors really like the Amazon Web Services story, it's actually twofold. One is the top line growth rate is fantastic. It is a business that's growing, not just for Amazon, but we see it from some of their competitors at Google, at Microsoft, for example. So the cloud clearly is one of the fast-growing areas within tech overall, and Amazon obviously has a fantastic position here. But what's unique for Amazon shareholders is that it actually makes money. There's a profit, operating profits there, unlike the core e-commerce business, which the company operates on a razor-thin margin as they continue to reinvest in the business.
It's really interesting reading through the press release. Lots of talk about the entertainment aspect of Amazon Prime. So obviously, most people know that you get all the free shipping and that gets people addicted, but they're really mentioning all the entertainment. Prime Video now available in more than 200 companies. It talks about their Golden Globe nominations in here, all the different videos you can watch. How important is that to the overall strategy, this the video stuff, the music stuff that Amazon is doing?
Yeah, it's interesting. Amazon over the last several years has really become one of the major players in Hollywood. Their programming budget for Amazon Prime will be approximately $2 billion this year. Makes them, they're spending as much money on programming as some of the big broadcast and cable television networks. So it's just extraordinary. They become a major player in Hollywood. And their strategy there is simply, they're not that they're a media player. They're there to make their Prime membership service more attractive to users. Prime drives usage. Usage drives the core business.
And worth noting real quickly, Amazon has turned green and just by under 1%. So still not a huge move, but now investors liking a little bit more what
they're trying to figure it out as we are. All right, we got some more companies breaking here. Take a look at GoPro real quick. We've actually seen, looking at their estimated revenue. So we're looking at, well, right now, fourth quarter, let's start with fourth quarter, what they have, $540 million in revenue. That's below the estimated $570, so pretty big miss on the top line. Looking at earnings, fourth quarter adjusted EPS, 29 cents versus 22. But then the big one is you look at what's going on in the future, and you're looking at expected first quarter revenue. So this is their expectation of 190 to 210. Oof. That's below 270 million expected. You can see the shares there down 10%. This is not helping for a company that already, whose stock has been decimated the past 18 months. They're now trading at about $11 at the close, now lower now.
And I should correct, because Amazon is still down. I was looking at stale data. So it's still down a little bit, not much of a move. Let's look at Chipotle also coming out. We see Chipotle Q4 revenue, $1.03 billion, basically what was expected. Comps down. I mean, obviously, this is one of the key questions. Comps down 4.8%, basically, as expected. You see the stock 0.5% down after hours. Not much of a move. The company also reaffirming forecasts, so no real new updates in terms of what's happening with store traffic, anything like that. Right. Q4 EPS 55 cents. So, yeah, as you can see, roughly in line for Chipotle in with what was previously expected, and as such, the stock is not moving much.
All right, and let's go back to Amazon real quick. As much as I love burritos and talking Chipotle, we still got Paul, so let's think about this a little bit more. We're looking at the Amazon CEO saying tens of millions of new paid members joined. How much more growth is there in terms of getting people to sign up for Amazon Prime? Are those new services like Amazon, Prime Video, which, Man the High Castle, awesome show.
Right.
But how is that going to keep bringing people that aren't already on Amazon?
Well, it's proven very successful to date. I mean, they have created it's a great service in general, given the free shipping and so on and so forth. But the programming is really becoming competitive. And when you think about streaming of content, people think Netflix. But I tell you, Amazon is right there as well. They're not as big as Netflix, obviously, but they are investing in their programming. They're investing in the service. It is becoming a significant player for content, and they're signing up tens of millions of subscribers over the years. And that is really important for their core business. So, you know, most people in Hollywood expect Amazon to be in this for the long haul. They expect the investment that they're making in programming, original shows, not just licensing shows, to continue to be very aggressive to compete with Netflix and Hulu and some of the others.
Is that going to be a problem for Netflix? Unlike Netflix, Amazon is this gigantic other business that it can use to fund content. Netflix has to use its own business, has to,
right.
Take out debt. Does that create a problem that they're up against this company that has tons more money to invest in its own company?
It is. It is a competitive risk for Netflix. Netflix acknowledges that very clearly. The advantage for Netflix, obviously, is they are first to market. They are much larger. They are much more global. They have a much bigger user base. And their programming investments are actually about $6 to $7 billion a year. So they're not backing away from Amazon at all.
All right, thank you very much. Paul Sweeney, Bloomberg intelligence analyst, helping us to break down Amazon. And we have more earnings. We're looking at Visa right now. Q1 EPS for Visa coming in at 86 cents. You see the stock, that's a solid beat of the estimated 78 cents for Visa. Operating revenue also coming in on the high side, $4.5 billion versus $4.3 billion, and the stock up 2.3%.
All right, I'm really liking this fire eye. So let's say it one more time, because look at the shares are down 20% in the aftermarket trading. Again, this is amid an outlook that doesn't look great, revenue that missed expectations, earnings that were actually a little bit better than the expected loss, but some news on the executive board with the chairman resigning and naming a new CFO. So a lot of stuff going on there. We'll continue to watch all these post-earnings moves in the aftermarket. This is Bloomberg.
I'm Mark Crumpton. It's time now for First Word News. President Trump says he's looking at, quote, extending the North American Free Trade Agreement, which he says has been, again, quoting, a catastrophe for our country. The president made the comments in a pair of meetings with lawmakers and employees of the Harley-Davidson motorcycle company. Mr. Trump has long railed about the country's trade deals, claiming they put American workers and companies at a disadvantage. A senior advisor to Iran supreme leader says threats from the Trump administration won't be effective. That's after the president said Iran is, quote, on notice following the latest missile test. National Security Advisor Michael Flynn says the launch was in defiance of a UN Security Council resolution. Iran called the White House remarks groundless ranting and said Tehran doesn't need permission to defend itself. Homeland Security Secretary John Kelly says construction on the border wall between the U.S. and Mexico will begin in a few months and could take up to 2 years. Kelly says he tells Fox News the administration has the authority to commence construction and is weighing methods of funding. He says he'd ideally like to partner with Mexico on the project because he believes, quote, it would be mutually beneficial relationship. And there's a report that President Trump told the president of Mexico he might send U.S. troops there to deal with what he called bad hombres. According to the Associated Press, the president told Mexico's Enrique Peña Nieto in a phone call that he wasn't doing enough to stop them. The call took place after Peña Nieto canceled a trip to Washington. However, the White House characterized the comments as, quote, lighthearted. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. Oliver?
Mark, thank you very much. Let's go back to some breaking news, and let's look at FireEye, because so far it looks like those are the shares that are moving the most here in aftermarket trading, down 18%. Pretty serious stuff going on as the company falls to almost $11. Two things. Firstly, the executive chairman resigned. They've got a new CFO that they named as part of this today. Revenue missed expectations. You look at earnings, actually a little bit better, but that top-line growth, not something investors want to be a part of right now. And,
of course, Amazon, the big one, reporting after hours. That stock down a little bit after their report, down 4% now. Though Amazon often has much bigger swings after its earnings. Interestingly, it beat on earnings, $1.54 versus $1.36, but net sales came in a little shy of expectations, not usually the pattern you expect to see with Amazon, so a little bit of a sell-off there. Cloud business coming in just slightly behind expectations.
All right, let's check out GoPro real quick because they have a pretty poor outlook for revenue in the first quarter in terms of giving some preliminary results. The shares are down 10%. We're basically looking at revenue. They see revenue in the first quarter about 190 to 210 million compared with 270 million. So they're missing by about 60 million out of 270. Not a great expectation for the outlook. In terms of the fourth quarter, things weren't quite as calamitous. The revenue did miss by about 30 million on an estimate of 570. Earnings per share were a bit higher. But at the end of the day, you look at this company, and that's what people are going to look at, right? It's what the expectations are with a company that's been hurt real bad.
Absolutely. And finally, on Chipotle, that stock dipping lower also after hours, though the results down 3% now. The results roughly in line. Comp store sales down 4.8%. EPS at 55 cents. That's within the preliminary 50 to 58 cents. Revenue 1.03 billion versus preliminary 1.04 billion. So just a little bit of a disappointment there for investors. Stock down 3%. What'd you miss? President Donald Trump said an all-star top-level team is working on getting trade in order. Speaking at the White House, the president went as far as calling NAFTA a catastrophe. Mexico's financial conditions have worsened since the election of Trump, and his protectionist policies may only worsen the country's economy. Joining us now is Juan Carlos Rodado, Director of Research at Natixis. Juan, thank you very much. In your view, where do things stand right now with regards to NAFTA? Do you think the two sides will be able to come up with a mutually beneficial deal?
It's extremely complicated. First of all, we have a lot of uncertainty on both sides. For sure, we have one country that has a very strong position, which is the U.S., in order to negotiate with Mexico. On the other side, we have a lot of political pressure regarding President Peña Nieto. You have a lot of social unrest in Mexico. You have as well a lot of pressure, but at the same time, what I think is going to be very interesting is to follow the fact that there's some sort of nationalism going through in the case of Mexico, and people supporting President Peña Nieto. So that's something that it's really interesting. The outcome, extremely uncertain, unfortunately.
There's obviously a lot of talk about what's going to happen if the U.S. kind of puts walls up around not just the Mexican border, but in terms of the sort of metaphor with trade. There's the idea that a lot of the developing countries and developing market economies will struggle. But if the U.S., let's just say hypothetically, these plans, these economic plans work by the Trump administration, he does get the 3%, 4% growth that he wants. I know it's a lot to get from where we are. But will those developing economies still not be able to ride the coattails of that? Perhaps not as much as they would have without those trade restrictions, but still powerhouse growth in the world's biggest economy.
Absolutely. And I think that the main question here is what is going to be priced in the Mexican peso today? And you have different scenarios. We can talk about the border adjustment tax, which is going to be something that is going to lead to a very strong surge, theoretically, of the dollar, probably a 25% surge of the dollar. We can talk as well about the 20% import tariff on Mexico, which is also going to lead to a very strong depreciation of the Mexican peso in theory. And my main point here is that we're having a Mexico that is struggling, that has a lot of uncertainty domestically and also externally speaking. And I think that the main point here is to see what is going to be priced after we have this rally that loses impetus, because this rally is going to lose impetus one moment or the other. And I think that is what is going to be the key factor. What is going to be next when we continue to price again the next actions?
Yeah, if we go into the Bloomberg, one of the probably surprising things for most people is that if you look at the major currencies since the election, the Mexican peso's the far-out winner. It's not even close. The Mexican peso is up 5.11% since the January 20th nomination. Sorry, I think I said election earlier. I meant inauguration. It's not. Other currencies aren't even close. Does this signal that some of the, even with all the uncertainty that's out there, the total confusion about what's going to happen with NAFTA, the domestic situation, that there's just like it's gotten so cheap that there isn't much of a case to sell it at this point?
Yes, I believe there was a clear overshooting regarding the currency. When we do models regarding the Mexican peso and we try to find what is the fair value of the Mexican peso, we have a value of 18. And at 22, it was definitely extremely cheap. And I think that was one part of the equation. The other part of the equation was dollar weakness. And that explains why, in the current context of dollar weakness, the Mexican peso is going to overperform. That explains the current rally. The problem is that this rally is being extremely intense, almost 6% over the past two weeks, which is extremely intense.
All right. Thank you so much, Juan Carlos Dorado, Director of Research at Natixis Asset Management. Let's do a little bit more breaking news here because we've got some information on Amgen. We're actually looking at earnings here for the fourth quarter. Adjusted EPS of $2.89, 10 cents higher than the estimate at $2.79. You can see a bit of reaction in the shares there, up about 3.4% as they trade after market. In terms of their expectations looking forward, they see the year adjusted earnings of about $11.80 to $12.60, so the high end of that also above the $12.44 estimate, so a little bit better than investors had expected. And let's take a look again at the movers in late trading, because we just got a slew of earnings, and it's kind of hard to keep track of them all. We talked about Amazon's revenue, which missed estimates, but one stock we haven't mentioned is Deckers, the maker of UGG's Uggs. You can tell I don't wear them. I'm reading the prompter. Missed on earnings and its forecast was lower than estimated. So we're looking at the maker of Uggs. They are 20% down. Warm, fluffy boots. You got any, Joe?
This is Bloomberg. It's time for the Bloomberg Business Flash, a look at some of the biggest business stories in the news right now. The advisory board company is interviewing financial advisors this week as it weighs strategic options that could include a sale. That's according to people familiar with the matter who say the company could attract strategic bidders across the education, tech, and healthcare sectors. The advisory board, which has a market valuation of about $1.8 billion, provides research and analysis for the health industry. Pfizer is exploring a sale of treatments in cardiology, urology, and primary care as the drug maker looks for ways to raise cash and streamline its portfolio. That's according to people familiar with the matter, who also say the drugs generate sales of more than $700 million and could fetch more than $2 billion from a buyer. Pfizer is working with financial advisors at JP Chase on the process, which is said to be at a preliminary stage. Cerberus Capital's Steve Feinberg could be leaving the company he co-founded to join the Trump administration. In a letter obtained by Bloomberg, Feinberg, who's also company CEO, tells investors he's in discussions to accept a senior role on Trump's team. Feinberg says he has a succession plan that would result in minimal changes if he does leave. And that's your Bloomberg Business Flash update.
Coming up, billions of dollars have flowed into ETFs since the U.S. election. But which ones are profiting and why are they the best choices? We'll look at the data. This is Bloomberg.
I'm Mark Crumpton. It's time now for First Word News. A Senate committee has voted to approve the nomination of Scott Pruitt to head the Environmental Protection Agency. No Democrats were present. The Environment and Public Works Committee voted 11-0 to send Pruitt's nomination to the full Senate. Democrats say Pruitt failed to substantively answer their questions about rules governing lead in gasoline and questions about air pollution and chemicals. The Homeland Security Department's Inspector General has launched an investigation into the implementation of President Trump's executive order temporarily banning entry to the U.S. from 7 predominantly Muslim countries. In a letter published today, Inspector General John Roth notified 2 Democratic senators who requested the investigation that the probe was underway. The president's order caused confusion and prompted protests at airports nationwide after it was signed on January 27th. The president today promised to overturn a law that currently restricts political speech by churches. In remarks at the National Prayer Breakfast in Washington today, Mr. Trump said his administration would, quote, totally destroy the Johnson Amendment. The law prohibits churches from maintaining tax-exempt status if they engage in political activity. Repealing it would require approval from Congress. Israeli Prime Minister Benjamin Netanyahu is promising to rebuild a new Israeli settlement as soon as possible to make up for one that was ordered demolished. Authorities were told by a court to evacuate the Amona settlement in the West Bank, which was built without permission. Some residents refused to leave and barricaded themselves inside until police dragged them out. The last time Israel built a West Bank settlement was in 1992. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. Joe?
Some breaking news regarding Uber. According to Kara Swisher at Recode, Uber CEO Travis Kalanick has quit Trump's Business Advisory Council, according to her reporting at Recode. If you'll recall, Saturday night, Uber came under a lot of fire for continuing to have cars at JFK during that strike. People view during the time when there was protesting. It was the taxi driver strike.
Yep.
Kalanick, the CEO, coming under a lot of fire for the fact that he's been on Trump's Business Advisory Council, which are now, according to Recode, says there's an internal memo that he has quit. Also, a view within Uber that his comments about the immigration executive order, they were lukewarm, mediocre.
Right.
So, so we'll
also
be following on this story.
There was also an online petition, I'm just reading an article from the Daily News right now, by the Independent Drivers Guild based in New York, this is according to the Daily News article the other day, had called for his immediate resignation.
And
so
a lot of people were, there was like a
building.
big delete Uber hashtag going around.
And then Lyft also kind of took advantage of the opportunity, and they issued a statement. So it seems like he's determined that it's important enough for him at least to make some kind of symbolic move. Who knows what kind of role he was going to have in the Trump administration, but whether or not it was symbolic or not, he won't be doing that anymore. And then let's get some more breaking news. Back to earnings. FireEye says Executive Chairman David DeWalt, who stepped down as CEO in June 26, has resigned from his company. CFO Mike Berry is also leaving the company. We're going to talk about this now. Joining us from D.C. is Bloomberg tech reporter Jordan Robertson. All right, so Jordan, we just became FireEye reporters because the shares are going nuts here. And there's obviously some shakeup going on within the executive board. Is this a big deal? Is this why investors are selling it, or is it on earnings?
Well, it's both. I mean, the problem with FireEye has been, anybody who follows cybersecurity news will know FireEye from its big data breach investigation, Sony and others. The problem is, as a company, for the past 3 years, the stock has declined pretty precipitously. It was, near $100 at the start of 2014, and now it's at like $12 or even $10 today. So as a business, FireEye has really struggled with, especially, the level of its costs and the cost of acquiring new business. And just the fact of the matter is that cybersecurity is an expensive business, and they have a lot of people at FireEye who do data breach investigations and things like that. So as a business, they've really been hurting for a while now, and as we've reported, there are many acquisition rumors and deals that companies would like to make. So they're certainly being shopped around.
What is it about FireEye's business model in particular that's causing them to lag the overall cybersecurity industry? I'm looking at the Hack ETF, which is an ETF that tracks other companies in the space not doing, it's not at its all-time highs, but it's not doing nearly as badly. You'd think things would be going well for companies in this space, given all the attention on the issue, President Trump talking about it. Why is FireEye unable to capitalize on what should be a good environment?
Sure. Yeah, it's a valid question because the cybersecurity market is really hot right now. The problem is, most cybersecurity companies are not an IBM or an HP or just these companies, or Facebook, these companies that kind of just keep growing and growing and can deliver these, these 20, 30%, returns that Wall Street wants. FireEye, has what's generally seen as, good technology. They've got a very good breach investigations team. The problem is that these companies tend to fit in best with larger companies. And as standalones, you see very, very few of them for this reason. Dave DeWalt, the executive chairman who's now leaving, who was the CEO until not too long ago, he was famous for saying, he'd spent over $1 billion expanding the international sales and other components of FireEye. It's just a very expensive business to be in, and the growth rates are just not the same as for software makers.
Jordan, sorry, don't mean to interrupt. We've got some breaking news here. Snap files for its IPO. That's the owner of Snapchat. So we just keep getting more breaking news here. IPO registration amount in $3 billion. I'm just reading the headlines here as it's coming through. So Snap did apply for the IPO, filed for the IPO. They applied for NYSE listing under the ticker SNAP. So, of course, we've been waiting for this for quite some time as the company looks to go public. This is obviously a pretty big deal. This is very interesting. It's also kind of symbolic when you have a small tech or new tech company listing. We've been waiting for this. A pretty big social media player coming on the scene. I think investors are going to be paying a lot of attention to this as well because, some of these companies have done pretty poorly or had rough IPOs. Facebook had a weak IPO, then the stock killed it. You've had companies like Twitter that have struggled. So this is going to be a really fun one to go in and figure out what exactly are going to be their metrics. What are investors going to figure out about whether or not they want to own the company? I think this is going to be a pretty exciting one to look at. You Snapchat, Joe?
I've used it a couple of times. No, I think it's an understatement to say that people are going to be interested in this company. I mean, this is going to be a huge IPO, one of the biggest tech social media IPOs in a long time. This is a behemoth, a company that people talk about as possibly being the next Facebook, a rival to Facebook, its own platform. And when you talk about people are going to be interested in the numbers, in the data, you have to remember, like a company like this, there's no comparables. They've invented a totally new platform, so it'll be very interesting.
Which is a good thing and a bad thing, right?
Exactly. So it creates a lot of potential that there's just this totally new thing, but it'll be very interesting to see how investors in Wall Street greet this IPO.
By the way, another element here, Sarah Fryer and Alex Brink, intrepid IPO and tech reporters that have covered this throughout the way, had an article a few days ago about whether or not Snap was going to pick NYSE over NASDAQ. So, of course, some rivalry there between the two. And that's a pretty interesting thing as well. So our reporting, or rather Sarah and Alex's reporting, was indeed correct. They chose to list on the NYSE. That, of course, is kind of a symbolic move within itself as well. But it's interesting when you talk about the sort of invention of metrics, right? Because that's what makes it so hard. There's also this issue of the company itself, which is, of course, the app prides itself on the secrecy element. We know that Evan Spiegel himself is somewhat secretive, and the idea that they're going to now have to go on sort of a roadshow, in a sense, and divulge everything is going to be very telling, and it's going to tell us a lot about how Spiegel is going to be able to run a company that is now very different in the public space as opposed to the private.
Yeah, absolutely. It's a very interesting. Also, of course, we got Facebook earnings out yesterday. Facebook itself has been copying some of Snapchat's features and Instagram on the official app itself. So Snapchat IPO coming out. Lots of big tech news. We started to see some of the numbers on the board. Daily average users, 161 million. Also, we want to hit the news again. Recode reporting that Uber CEO Travis Kalanick resigning from Trump's Business Advisory Board after lots of controversy. We'll be back with more. This is Bloomberg.
All right, breaking news again. Snap files its IPO, the owner of Snapchat, the messaging app, of course, going public, doing it on the NYSE, and for a filing of $3 billion in shares. So this is something we've been waiting for quite some time. This is going to be a huge tech IPO. It's going to set the tone. So let's figure out what's going on here. We've got Alex Barinka. We're going to have Alex Barinka in a sec to talk about it. Now,
Alex, are you able to hear us?
Now I can.
All right, Alex, huge IPO, S1. What's the big takeaway from this filing?
The big takeaways right now on first blush is going to be how this company is positioning itself. They're talking about the future of this company, and where they will invest in growth is to develop the camera platform. That's how they're going to drive user engagement. And when I dig in a little bit, again, the first few minutes looking at this deal prospectus, some of the headline numbers that I think are important: 158 million daily active users. 25% of those are posting every day. The other thing that Snap is really pressing is this idea of engagement. It's not about the number of users they have, but it's about the engagement of the users that are on the platform. And that brings us to average revenue per user. For 2016, it was $1.05. That's up from 31 cents in 2015. And they're also saying in the first 3 months of this year, they're bringing in $2.15 per user. So these are some of the big headline things, first blush, we're looking at before we can dig in a little deeper to this thick S1.
Alex, in your reporting, what do we know? Do we know anything about the bankers behind this? Do we know anything about who they've been talking with or have had previous conversations with that might give us some idea who's going to be leading the deal?
So Morgan Stanley and Goldman Sachs are the two leads on this offering. There's a slew of other banks that you can see in there in the S1, and they're the ones who help them craft the message for, the first coming out party for this company. And they're also the ones who are helping them look at what kind of things they need to tell investors. As soon as I go back to my desk, the top things I'm going to be looking at are going to be the risk factors. What is Snap laying out? What are they concerned about? The other thing I would focus on, there's typically an area called competition. That is going to be important as well, to see how they position themselves against the likes of Facebook, of Twitter, and potentially other media companies. The last big thing that comes to mind that their underwriters kind of will help them work through to include in this document are going to be things like legal proceedings and acquisitions. That information will be in this S1 as well. So I will be digging back in for you to bring you more.
And some of the other numbers, or one that big stands out, I just had it on my screen. It says Snap to spend $2 billion. Actually, that's not as important. 2016 adjusted EBITDA. It's moving so fast. Revenue for 2016, $404 million. So this is really substantial. This is not just a company that's sort of like trying to figure out their model. $404 million. That's not nothing.
I will say, Joe, it's a new thing for them. Last year, in 2015, it was closer to 60 million. So you can see the growth there, but they've only really been monetizing users for a couple of years. If you put it in perspective, at the low end of the valuation, $20 billion is what our sources tell us they're going for in terms of market value. That's still, upwards of 50 times trailing 12-month sales. So putting a little perspective on that number, you can see that they have a lot to justify here in terms of the premium that they're having to convince investors to buy into in this IPO.
All right, thank you very much, Alex Barinka, and we'll be following your reporting for more on this S1 and this IPO. And now I want to bring in, we're going to continue to talk about Uber. CEO Travis Kalanick is leaving President Trump's Business Advisory Council. We want to talk with Bloomberg's Brad Stone. Uber always is a lightning rod for controversy, and something about Saturday night, in particular, the fact that Uber was on, or Kalanick was on Trump's advisory council, that they were still sending cars to JFK amid a taxi strike and a protest, really set people off. What do you think is ultimately why this was something that the CEO felt he had to do?
Right, because they could have pulled out on Sunday morning, right? Their nose got bloodied for a week. And I think two things were happening. One, their key constituencies, drivers and then riders in major cities, generally, blue-leaning cities, are up in revolt. And, and so Uber was taking all this fire, not necessarily logical, because a lot of CEOs are on that council. I think the second thing that happened is Uber is starting to worry about what else is coming. There's a lot of of talk right now that we could see an executive order around LGBT rights. If that comes, then you start to get into some really turbulent waters here, and it's an uncomfortable position. We know that Bob Iger, the Disney CEO, is not going to the meeting of the Business Council tomorrow. I think all these CEOs are starting to wonder if the PR cost is worth having a seat at the table.
So, okay, let's talk about the PR cost. Let's take it back to sort of stage one here of the story. Why exactly was Kalanick on this advisory council? Do we know what the nature of his role was going to be?
I mean, there are 19 CEOs on that council. This is about a seat at the table, right?
Yeah.
It seems like a no-brainer. Why wouldn't you want to be in the room? But what we're seeing right now on Twitter is a sort of rangeless, almost I would say mob mentality. There's not a lot of logic behind it. And Uber has always been a lightning rod, Joe, as you said. We maybe expect more from them for some reason. Maybe the previous lapses in their behavior, the reputation that they've accrued as being a kind of tough player.
I mean, he's a brash guy. And to the fact that it took this to kind of make him go back.
And they didn't really do anything wrong. I mean, actually, Lyft was operating at JFK as well that Saturday night.
One thing that is particularly distinct to Uber is that the regulatory environment is very important for them. It's very important that cities that they not get hurt by taxi regulations. Their labor issues are very important, and how they treat their drivers and how they treat how they classify their drivers. So it's very important for them to have good relations with the states and the cities. Do you think they feel that at the national level, relations aren't as important?
It's not as important, but certainly when the conversation turns to driverless cars, when it turns to environmental regulations, they thought that they could have a role to play. Maybe the optics seem to be favorable. Elon Musk is in there. Ginny Rometty from IBM is on there. Right. Certainly, though, in the end, not worth the price, the reputational price they have paid.
All right, Brad Stone, thanks so much for helping us wade through more Uber news. He's a senior executive editor of Global Tech. And just real quickly, that was about Kalanick, Uber CEO, saying he's not going to be part of Trump's advisory council. Then we also just had breaking news on Snap, owner of Snapchat, the messenger service, filing its IPO on the NYSE, expected to be about $3 billion. This is Bloomberg.
It's a big year for politics in Europe, with France, the Netherlands, and Germany all seeing elections that pit establishment figures and more radicals. How has this uncertainty affected markets? Joining us now is Benjamin Siegel, portfolio manager at Neuberger Berman International Equity Fund. Benjamin, thank you very much for joining us. You know, obviously, 2016, lots of people got everything wrong. Now people nervous that they're going to get everything wrong again this year. But how does that play out in markets?
I think people are overcompensating, quite frankly. I think the Brexit vote and the Trump election made people all the more sensitive to the risk of a National Front, Marine Le Pen-led government in France. I still think that's a very low-risk scenario, mostly because the way French elections are structured with 2 rounds of voting, where the second round is the top 2 contenders, and I think the non-National Front group will outweigh the National Front group. So I think you end up with a little bit of a relief, a rally there, because there is clearly some uncertainty. But at the end of the day, Europe really has to reform, and I think business trends are heading in the right direction.
If they get all of that done right, it's a big if, right? And there's still a lot out there. But there's sort of an interesting kind of investment thesis about whether or not to be in the U.S. or whether or not to be in Europe as we start to look at some of the political turmoil unfold. It feels like theirs could potentially be on the downslope as ours is just starting to get going.
I would actually take the opposite view on that. I think the risk is already discounted that you end up with a more fractious Europe. I think we've seen the dollar rise.
But how's the risk baked into the U.S. when you've got a VIX at 11?
Well, I think I'm more in terms of the currency. Okay. It's not risk in the markets per se. So you've got VIX down, volatility in keeping valuations relatively high here in the U.S. So when we look at the currency risk, which is less outside the U.S., I think you've got political risk, which is probably overblown outside the United States, and you've got regulatory reform. Think about what's happening on the business sector outside the U.S., where the incremental change is positive. In the U.S., I think we're talking about policies which are designed to take us a little bit back to the 1950s, which I think is the wrong direction. So I think you've got much more upside outside the U.S. So multinationals and local companies in Europe and Japan look more interesting.
Yeah, let's go back to that, because a lot of people we talk to, investors, business people, they're very excited about the regulatory and the business environment in the U.S. They're talking about tax cuts, deregulation. You're skeptical.
Yeah, I think there's a couple of sectors that are going to benefit. I think you get much less reform, so much less regulatory controls over the banks. So I think that's positive for the domestic banks here in the U.S. I think you've got also potentially a more benign EPA, which is positive for energy. So in our global portfolios, we've got exposure in the domestic U.S. to that. But when it comes to global businesses headquartered in the U.S. versus those overseas, we much prefer the companies outside the U.S., the SAP, rather than the Oracle, the Daikin in Japan versus the Carrier, sort of UTX here in the U.S.
Let's talk about stocks overseas. Let's talk about them in Europe. I want to jump into the terminal real quick, where I'm looking at European volatility, V2X index. Obviously, it's pretty low as well. It's at about 16. So you can see that we're obviously way off the highs in June for Brexit and July, and then we're off the highs from November here. Flip it over. This is the futures curve. Now, there's kind of a bizarre pop here at 3 months, and then it sort of flattens out. What does this tell you about what investors are expecting?
Yeah, I think we've got a bunch of elections, and I think this is telling you investors want to see get some reassurance around where the path is. I think in the U.S. we're living with political uncertainty, regulatory uncertainty. I think the path in Europe is much more visible, but I think getting those elections behind us, particularly in France, will be key.
Real quickly, not all European countries are the same. Some are doing well. Germany seems to still be doing well. Italy's economy seems to be kind of stuck in neutral. Are there any specific countries you really like right now?
Yeah, I think it's absolutely critical to be selective, and that's where I think active asset management really comes in. We're enthusiastic about the Nordic markets. We're enthusiastic about Germany, as you say, the Netherlands and France for global companies, but avoiding Italy and avoiding Southern Europe in general.
You got it. I have to leave it there. Benjamin Siegel, thank you so much. Portfolio manager at Neuberger Berman International Equity Fund. Coming up, what you need to know to gear up for tomorrow's trading day. That's next. Don't miss it. This is Bloomberg. All right, recapping the breaking news in this hour, because there was a lot. Snap Incorporated, the makers of Snapchat, did file for an IPO. $3 billion on NYSE, the social company, will be the first since Twitter. That was 3 years ago.
Have a great evening. This is Bloomberg.
I'm Elisa Parenti, and you're watching Bloomberg Technology. Let's start with a check of your first word news. President Trump says he's looking at redoing the North American Free Trade Agreement, which he says has been, quote, a catastrophe for our country. The president made the comments at meetings with lawmakers and employees from the Harley-Davidson Motorcycle Company. The Homeland Security Department's Inspector General has launched an investigation into the president's executive order temporarily banning entry to the U.S. from 7 predominantly Muslim countries. Inspector General John Roth notified to defend itself. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg. Bloomberg Technology is next.